This is the Scrap Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Metal Recycling, October 3rd, 2016.
Last week, some commodity prices rose a bit, and economic reports were mixed. U.S. steel production fell to an 8-month low, which is bad news for jobs and is bringing down finished steel and scrap metal prices. Oil ended up a big 8% for the week at $48 a barrel due to OPEC agreed to reduce production. This may not lead to major price increases due to U.S. drillers have been increasing production as well. The U.S. oil rig count is still down about 74% from 2 years ago, but it's been up for 14 weeks in a row and is at the highest level in about 8 months. This can help stabilize falling steel and scrap prices. Iron ore ended Thursday down about 1% for the week at $56 a metric ton and has been down about 5% for the month, reflecting weak global demand. Steel scrap prices did not change last week, but prices could be down $10 per gross ton or more this month, about 50 cents per 100 pounds. This is really due to weak global demand. Hot rolled coil steel prices fell a bit. Tariffs are keeping prices higher than they were, but with some softness in demand, prices have come down. Stainless steel forged scrap prices rose a bit, but with weak global demand, there are no major increases. Copper rose a penny to $2.21 a pound on no new news. U.S. dollar weakness has been a key to the recent increases. The 5-year copper chart shows copper remains in a range with little change in a year, and prices really remain near 7-year lows. With copper inventories at 1-year highs, we would not expect any major price increases coming anytime soon. Aluminum followed copper and rose about a penny to finish at 75.2 cents per pound. And when looking at this 5-year chart, we see aluminum has been trending slightly up for the past year. With inventories at new multi-year lows and China aluminum production strong, we would expect stable prices in the coming weeks. The U.S. GDP, gross domestic production, an overall measure of the economy, rose 1.4% in the second quarter, up from the previous estimate of 1.1%, which was much better than the 0.8% in the first quarter. Some believe we could see more increases in the coming months, which could stabilize falling steel prices. China's NSB Manufacturing Purchasing Managers Index was 50.4 in September. Anything over 50 is growth, so the number is much better than it was a few months ago when there was contraction, an under 50 number. This again could help stabilize global commodity prices. U.S. consumer sentiment increased to 91.2 in September from 89.8 in the previous month. It's the highest reading in 3 months and better than market expectations of 90. Consumers were more confident about the future and less pessimistic over current conditions than initially anticipated. U.S. initial jobless claims rose a bit last week to 254,000, but the 4-week average, which smooths out the data, was 256,000. This matched April and is the lowest level since 1973, about 43 years ago, which is a very positive sign for the U.S. economy.
With that, we hope all have a safe and profitable week.